In case you haven't noticed, health reform is back. Or at least the fight for health reform is back. And on the front lines today, the Obama administration is out with a new report that sees your outrage over WellPoint's giant rate hike plan for California and raises you 6 more giant rate hikes in other states and a projected future of rate hikes forever and for all. WellPoint's initial plan to raise rates for Anthem Blue Cross customers in California by up to 39% has been postponed after a firestorm of protest. A variety of state and federal officials are looking into that. But the Department of Health and Human Services says it's not just Anthem and it's not just California. Today's report highlights huge increases or attempts at huge increases in states like Michigan, where Blue Cross Blue Shield has put in a request to raise rates for individual insurance plans by 56%. Or states like Maine, where Anthem was rejected by the state when it requested an 18.5% premium increase last year. Now they're back saying they want to hike rates even more, by 23%. Premium hikes like these aren't just explained by increased healthcare costs. Many of these hikes are 5 or even 10 times higher than the increase in the cost of care. HHS also says the biggest insurance companies made 56% more profit in 2009 than they did in 2008, all while insuring fewer Americans and spending a smaller proportion of the money they take in premiums on actual medical care. In other words, insurance companies are making more money because they're providing less to fewer people. Awesome. And that, says the Department of Health and Human Services, is why we need health reform. And here's the part where a rapidly growing group of Senate Democrats enters from stage left. Last night on this show, we talked about a letter written by 4 Democratic senators to Harry Reid calling for the return of the public option. These 4 senators asked Mr. Reid to bring the public option for a vote under budget reconciliation rules, which means it couldn't be filibustered. A real majority, 51 votes, is all it would need to pass. The letter from those 4 Senate Democrats was made public on Tuesday. By Wednesday, by our show last night, 7 other senators had signed onto it. And now there are yet 7 more. We're up to 18. 18 Democratic senators publicly calling for a vote on the public option by a legislative means that would avoid the filibuster so it could pass with a simple majority. Joining us now is Health and Human Services Secretary Kathleen Sebelius. Madam Secretary, thank you so much for your time. It's nice to have you here.
Great to be with you. Welcome to D.C.
Thank you. I'm having a great time.
Good.
Specifically on the Anthem planned hike in California, you have asked the company to try to justify that hike. They have made some responses to your requests and state officials' requests. Have you felt like you've received a satisfying answer?
Well, I think for a company that posted a huge profit in the 4th quarter of 2009, $2.7 billion to be exact, to turn around and then say to 800,000 Californians the following week, we desperately need to increase your rates by an average of 39%, doesn't seem to make a whole lot of sense. And we're talking about people, Rachel, in the non-group market, so they don't have the protection of being able to negotiate in a bigger pool. They don't have the opportunity to get discounts. Most of these folks are locked out of the group market either because their employers don't offer coverage or they may have a pre-existing condition, so they really have no options. And they're looking at coming up with thousands of dollars more or not having coverage at all.
Sounds like you're not satisfied with that explanation.
Not so much.
You said today that the president plans to put out a proposal for health reform before this big bipartisan summit that's due to happen next week. What should we expect that plan to look like? Is it a combination of the House and Senate bills?
Well, I think he's likely to get a lot of the best ideas. As you know, the House and Senate have worked for over a year on really comprehensive health reform to lower costs, premium costs to individuals and families, and the CBO says both bills do that, to lower the long-term rise in health care costs so that we don't face increases year after year after year. The Congressional Budget Office, again, says both bills do that to cover a lot more Americans. I mean, both these bills address 30 to 35 million additional Americans would have affordable coverage. And finally, to go after the insurance companies for the kinds of practices that we see here, and not only the kinds of rate increases, but the kinds of restrictions and benefits, kicking people out of the market, locking people out of the market. Those rules would change once and for all.
Between the two bills that have passed, one passing the House, one passing the Senate is rather more conservative bill. If that ends up being the basis for what is finally signed, would that bill actually prevent the kinds of rate hikes that I described in this introduction that your department did this report on today?
Well, what it would do in both the House and Senate bill is it wouldn't take over insurance regulation away from the states. It would assume that the states are the first line of defense, but it would do a couple of things. One is require a huge spotlight on any rate increases. So companies would have to basically file online. Anybody, any place would get to figure out what's going on. Just the spotlight on Anthem has made them delay for 2 months what's going on, and I think we'll see what happens. It also would have a requirement for a medical loss ratio at about 85%. So the money that comes in the door, about 85% of it would have to be spent on paying for health costs, not for CEO salaries, not for advertisement, not for overhead costs, but health costs. That's very different than it is today, and it would require, if that doesn't happen, the money would have to be rebated to customers. So you'd make sure that you couldn't have this dramatic increase in rates and not a dramatic increase in health costs, and some choice and competition, which is huge.
Well, on the matter of choice and competition, when I heard about the Anthem Blue Cross hike, and actually know the people in my personal life who are affected by that directly, and my feeling about that is, wow, I wish that the insurance companies were regulated so that couldn't happen. In a way, I sort of feel that way. But more than anything, I feel like, wow, insurance companies have been really awful, and we've left entrusted to them essentially creating an American healthcare system, and they've done a really bad job of it. I don't know anybody who loves their insurance company. I know a lot of people who like their doctor. And looking at those rate hikes, yeah, I want regulation, but really I want people to have an option to get something other than private health insurance, because I think private health insurance has not been great for the American people. It just really hasn't. And there's some things that are nice, but the overall system really hasn't worked. And it's made me want the public option, maybe more than I've ever wanted it, looking at these hikes again. Do you guys in the administration understand the visceral reason that the public option still polls so well? We really don't trust the insurance companies to have our best interests at heart in this country.
Well, I think that the essential piece is some competition. In most of these cases, and across the country, about 94% of the market, companies have a monopoly. There's no one to compete with, and particularly if you are the mom who wrote me from California looking at a 38% rate increase, which translates for her into $7,000 a year more for her family. Her son has type 1 diabetes. She's a single mom. She has no options at all.
Yeah.
She can't drop coverage because it could be a life or death situation for her kid. She doesn't know where she's going to come up with $7,000, and there's no other company to go to. So what she needs desperately is an option, and an affordable option, some help paying the premium, but some competition. Let's go back to just market principles. Let's compete. Insurance companies should not have a monopoly. They should not be able to, have profits that so far exceed any healthcare costs that they drive.
In the competitive market that we have, the more or less competitive market that we have now, nobody looks at one insurer and says, now they're doing an awesome job serving all of their customers. The private insurance company writ large hasn't done a great job. That's why we want a public option to compete with them. These 18 Democratic senators want to bring that back into the fold. If that happened, would the administration fight for it?
Well, I think if it's part of the decision of the Senate leadership to move forward, absolutely. And the president said from the outset he thought that was a great way to provide cost reduction and competition. But if that is not the choice of the majority moving forward, I think there are other ways to get there. But the competition and choice for consumers are the essential features. I mean, we've got to give people a way to afford coverage, and also make sure that companies can't write their own rules, and that's what's happening all over the country.
Health and Human Services Secretary Kathleen Sebelius, I'm really thankful for your time. It's nice to have you on the show.
Great to be with you.
Thank you. Good luck.
Thanks.
Public option. There, that was my lobbying for the day.